Hi, everybody. I am Privacy Smurf, as you all know. Today, we are all here together to go over some workflows using the watch lists that I post daily and the associated breakout trading strategy. We have a lot to cover, so I'll kind of go through that as quickly as I can without confusing everybody. And after I do a brief intro about all the watch lists, we'll go into the implementation with the strategy. And during that time, I'll open up the floor for people to ask questions. There is the chat on the side where you can ask questions, and I'll kind of keep an eye on it. But later on, I'll allow everyone to open up the floor to speak, and you can ask your questions if you want in public and in the chat. If it's relevant to what I'm going over at the moment, I'll address it then. But yeah, let's get through this. First off, why am I making the watch lists and why do I put them out? The idea of them is to narrow our focus. There's over 2,000 symbols that I'm collecting data on. There's like 2,400 or something like that that are available in TradingView across multiple exchanges. And that's way too much to really kind of pay attention to on our own. So I created the watch list to really create a narrowed view on the things that we actually would want to be trading and not just kind of like picking stuff at random. Also, they are designed to search for a specific model of the price. Like not all charts are created equal, as we all know. And we want to focus on things that ideally will hit our targets in the least amount of time possible. So we're not wasting our time and money just kind of waiting. So we can create models of what price structure may look like that has in the past led to specific, future action. So each of the watch lists are created using some specific criteria that will model a price behavior that has led to upwards price expansion in a short amount of time. We'll get into that theory and each of the watch lists here in just a second. First, we're going to go over where they are. Hopefully everyone can see my screen. I know this is like the live stage that we're looking at right now. But on the left here is the actual server. Let me see if I can make this a little bit bigger. Sorry, I forgot that you can see this over here. When we're looking at the server, there is a category, which is just the drop-down menus. There's a category called trading products, and in there is the channel custom watch lists. This right here includes the overview of all of the watch lists and like a brief description of what their creation criteria is. And then below that, if you click on the tips, it'll give you just kind of the same sort of thing from a light touch of what we're going to go over today. So this is helpful if you just need a refresher, like a brief refresher, like in text of what each watch list is. Then every day, if you use the category Analytics exclusives, this drop-down category here will have all of the watch lists, and every day there will be a new, fresh set of interesting. I don't know why that's like that. There'll be a fresh set of watch lists that you can import into TradingView. You can click the little download button on the side, and that'll save it to your download folder. And then inside TradingView, I'll go over that in just a minute. You can import it, and you can look at the symbols. There is a little README up at the top for each of the channels, and that will take you to back to this custom watch list channel in case you need a little refresher. But yeah, so each of the channels will have all the symbols associated with the particular category. I'm doing searches on both USDT symbols and alt BTC symbols. So you'll see, just like we're here, Kaka USDT, and then below that will be the BTC symbols, so e-game BTC. Each list, there's an option, there are some categories that won't have any symbols that qualify for that particular model, and there'll just be a line there that says there's no symbols in this watch list. So if there's not anything available, it won't just spit out an empty list for you to download. One of the neat things about putting this file into Discord is you can expand it. You can kind of look without having to import it into your trading view if you don't want to. So you can just kind of scan over it real quick and take a look at what's in the list and just add an individual symbol, like on your own manually if you want, or you can download the file and then import it to your trading view. So that's where they are, and shows, and also includes wrong channel, includes sort of what they are right there. Moving on then. All right, we're going to talk about how the watch lists are made. There are, let me see if I can go to, get this screen set up here. All right. The different types of watch lists are, we'll kind of go through in the Discord. If you're looking at the Zenalytics exclusives category, we'll kind of walk through each of the categories and how they're all made. The graded price structure watch lists are essentially like I put out a post about market regimes. It's in the education tab as well, and I linked to that in the Discord. But there are four, that's based on a stage analysis by Stan Weinstein. He posits that there are essentially four stages of the market. There's a stage one, which is the accumulation period. So we'll say, let me scroll back in the chart here. Everybody can see my chart. There's, I think I can draw this out. There's stage one, which would be like your accumulation period where there's been a decline in price. I can draw arrows here somewhere. All right. So there's been a decline in price. That decline has ceased, and prices are sort of chopping around and not really going anywhere. And this would be theoretically the accumulation of supply. People are buying up whatever the asset is in preparation for a bull market or something like that. So this would be stage one, your accumulation phase typically after a decline. Then you have stage two. We'll extend this out. I should be changing these different colors, but whatever. Stage two, we'll put it around here. I do have it. Sweet. Oh, no, I set that up for a 20-minute chart. Dang it. Whatever. Doesn't matter. Sorry, so you're just going to have to deal with the same color. Stage two would be your uptrend. And this is where your asset that you accumulated here during this phase will be appreciating in value. Not really a lot to say on that. Then stage three would be the distribution phase. We'll call that right here. And this is when all the profits from the accumulation phase are being distributed to all the retail who's super late to the move. So you'll have potentially upwards trending price action, but you'll have increased volatility. You'll have like a larger increasing range as multiple people are selling out of their positions, and the people who don't know any better are buying into those positions. So there's a lot of volatility, and that is generally a precursor to stage 4, which would be your downtrend, which this is not like a super long example, but it's after you've distributed all those profits from this run, then you have price trending down. Those are generally the 4 stages. So the watch lists are created to potentially identify assets that are in these specific phases, or stages, if you will. So that's what the graded watch lists are created for. I have specific things that I'm looking both in price action and configurations of moving averages that closely, we'll say loosely associate or correlate to price action in these specific phases. There are only so many. There are only so many ways I can model that in TradingView, so I can't really show all that, in like an indicator that I would put in PineScript for everyone to like really do this on their own. But in Python I can code that out and then just import, the symbols. Like I can pull all the data and do all the analysis and then just send you a watch list, and that's a lot easier. Anyway, so the watch lists are designed to identify stuff in these different stages and or identify other notable tradable scenarios. The graded watch lists let's start from the bottom since we're looking at stage 4, and since things typically start from stage 4, we'll look at the graded watch list D first. Graded Watchlist D, we'll do it this way. This is how you add, cancel. Let me get rid of these real quick. This is how you add the watch list to TradingView. Once you're inside TradingView, there will be this little icon up on the top right. From here, you can open up this panel on the side, which is your watch list panel. This is the title of whatever watch list you're looking at the current moment. You'll click the little caret for that drop down, import watch list, and it'll be downloaded to whatever your folder is that it's saved to. And we will import in our watch list D first, and we'll look at that. The watch lists, all of the watch lists are sorted by the CMO, one of the indicators that I've written out. They're sorted by which assets have the highest momentum, or like momentum rank. So symbols that are up near the top will have higher momentum than symbols all the way at the bottom. So ideally, you'll be focusing on the higher sets, like the higher half of the list. But momentum is only really just like a picture to a specific period of time. So like this is just like today. So like tomorrow the momentum could change, but really the higher ones every day successfully are kind of the ones that you want to be paying attention to more than anything else. Because it's entirely possible that the ones at the bottom of the list have like negative momentum or bearish momentum, and you don't really want to be dealing with that. But anyways, so we've imported Watchlist D, and you'll click on one of them, it'll load up the chart. And you can see that on my chart, I have the look back highlight bar. That's one of the free indicators that everyone should be able to see from searching. If you type in look back highlight or even just look back, I think my script pops up. But anyways, I have it set for 100 period. So it's counting back 100 bars from like the current bar, because I like to try and keep the same sort of view of the charts across every asset that I'm looking at. So I'm kind of keeping the same time context. So anyways, you can see if we scroll back a little bit, this asset has been in a prior downtrend, and that trend is sort of stalled out like right around here. Like at this point in time, all the way through here to there, you have price sort of like going up and down around this focal point. So your downtrend has stopped, and it started to show some sign of reversal. That's essentially what Watchlist D is looking at, or what Watchlist D will categorize assets in. Stuff that was in a prior downtrend and is probably in stage one or in the accumulation phase. When the watch lists are created, like if we start if we're coming out of a bear market, there won't be any symbols, or there will be very few symbols in Watchlist A, B. Well, in A or C, there won't really be that many watch lists, probably B too. But there will be more there will be more symbols in Watchlist D. It'll be the biggest one to start off with. And you kind of want to pay attention to the rotation from symbols that are in Watchlist D that move up into Watchlist C, which move up into Watchlist A. That's kind of the progression of things in the market. So Watchlist D will be where you'll be starting off at, basically stuff that's in the stage one accumulation phase. Then we have Watchlist C. Let's import that real quick. Let me check the chat to make sure we're okay while I import this. Do we need a certain level of trading view? No, I don't think so. Well, I mean, you have to have an account. I don't think you can import a custom watch list without having an account, but I think the lowest level will allow you to import watch lists. And thank you, Alchemy Farmer Dave, for answering as well. Okay, so Watchlist C is stuff like this is very similar to the symbol that we just looked at in Watchlist D. It has been in a prior downtrend, but the difference between C and D, and I did not do that correctly, the difference between Watchlist D and Watchlist C is you have like this, oh my god, this is horrible. Like you have this this bullish price structure that is not present yet on Watchlist D, where you have like a low, a high, a higher low, and then you've broken out to a higher high. So this is the difference between Watchlist D and Watchlist C. There's a better bullish associated price structure than Watchlist D. So this in the progression of the market, this is Watchlist C is really where I start to be interested in a potential buy of an asset. So Watchlist C I'll spend usually more time in than anything else when the market is starting to pick up, because I don't really care that something's starting to show or like about to show a reversal, which will be like these symbols. Watchlist D will be stuff that's like right in this phase right there, somewhere in between here. The stuff that I'm really interested in is stuff that's really confirmed that it's like, okay, yeah, we're in a reversal phase. So that's Watchlist C. Man, I'm sorry, Anonymous. I don't really know what the deal is. That's really weird. I'm not really sure what to say to help you out on that. Okay, and except maybe you can watch the recording. Sorry. Watchlist B is, well, actually, we'll skip into Watchlist A first, and I'll explain why in just a second. Watchlist A, we'll import Watchlist A. We'll take a look at that. This will be, there's going to be a lot of symbols that look really good here. not really this one, but sort of when you keep it in in the context. So comparing the difference between Watchlist C and Watchlist D. Watchlist D would be something that has like hit its bottom and has started consolidating right in there. Then you have this break up here. So this would be where Watchlist D starts. Then it comes down, breaks up here. This is where, dang it, that would be where Watchlist C started. So let's go bottom, whatever, accumulation, Watchlist D. Then Watchlist C would be right here. And then once it is broken above older resistances and price action structure and moving averages are looking all in alignment, then you'll be moving into Watchlist A. So Watchlist A assets will be stuff that is confirmed the bullish structure and they've been bullish long enough that the slow, medium, and fast moving averages are all in bullish alignment. So the fast will be over the medium will be over the slow. So everything is really flipped. Like if you've seen a picture of a moving average ribbon, it'll be similar concept to that, where all the moving averages are in line from top to bottom. This watch list is important to recognize market leaders. The first few assets that show up in Watchlist A are really where you want to be positioned. And you also want to pay attention to them as the market starts to turn, because the market leaders will rotate their profits into the market laggards, and then the market laggards will catch up, and then everything will fail and crash from there. So when the market leaders start to slow down, it's important to realize that, like, it's an important concept to note, because it's showing that the biggest, strongest, best assets are now becoming weak. And oftentimes they'll be what is propping up the market. And once they start to decline, then soon after everything will decline. It also, if there is some sort of commonality between the ones that pop up in Watchlist A first, like back in January or in December and January this year, the market leaders were all commonly AI related cryptocurrencies. So positioning in Viat on KuCoin and AGIX and other various AI coins like really paid dividends over other things. Like everything moved, but like those ended up being, 800% runs or, 12,000% runs on some of them. Like they were just really, really good, consistent earners with multiple opportunities to buy back in. So a Watchlist A is important to recognize the market leaders or leading sectors early. And also Watchlist A is really good for the swing trade method. We're not going to go into that, but if you are using that methodology, Watchlist A is a good place to look for the stuff that's strong that you can buy back into if you missed the initial run up. So like potentially around here or around here, there could have been a swing entry to the upside to make a quick play out there. But anyways, this is Watchlist A, stuff that is confirmed its reversal and been bullish long enough to change the profile of moving averages to all be in alignment bullish. All right, so moving on. So that's Watchlist D, C, and A. Watchlist B, we'll import that here. And the thing that's kind of funky about Watchlist B is it's sort of the same thing as Watchlist A. The only difference is history. They will not have as much history as all the other lists. So I want to be able to find things that would be in a Watchlist A condition if they had enough price history. So these don't have enough history to create the long-term moving averages, but they still qualify without that. So that's what Watchlist B is. It's like a pseudo short historied Watchlist A. So you'll be watching for initially stuff like, given you're starting from scratch in the market, you'll be looking for everything in Watchlist D, monitoring stuff that translates from Watchlist D to Watchlist C. Then Watchlist C will be where you're looking for like your good potential bull market breakout runs or breakout assets. And then from Watchlist C, they will move into Watchlist B or Watchlist A, given how much price history they have. And the stuff in Watchlist A, the first ones into those two watchlists will be your market leaders. And eventually, a lot of assets will rotate into the Watchlist A and Watchlist B category. When the Watchlist A category is like way bigger than C and D, then that's like the moment to start worrying about the market, because everyone is making money at that point in time. And that can't last forever. So that's the graded watch lists, all in combination, are what creates the market validity score that I have in the Discord. That's monitoring sort of the breadth and health of the market. So when you have below the midline in the market validity score, most assets are either not on a watch list or they're in Watchlist D. Then as things get more into Watchlist B and Watchlist A, then you'll have the market validity score moving above the midline and starting to get into the higher regions. Then once the validity score is like nearing that red zone at the top, then you'll have most of the assets that are in Watchlist A, and that's when you have to really be careful in involving yourself in new positions, because you'll probably end up losing because the market is like at an extreme point and it will probably retrace. That's Watchlist D, C, B, and A. Now we'll go into the notable highs watch list. The importing a watch list is just like this, where you'll click this little box on the top right. That will open this panel for your watch list. Click the down caret there, and you'll click import watch list, and let's do notable highs. There are 3 watch lists in the notable highs channel. There's under notable high, new yearly high, and new exchange high. The separation of those is like sort of ticky-tacky. Oftentimes the new exchange high and new yearly high will be the same, especially if we're coming out of a bear market, because new stuff will have been listed to an exchange during the bear market, which won't have like a prior all-time high. So oftentimes the new year, like the new 52-week high, will be the same as the new exchange high. But basically the new exchange high is, since this asset was listed on that exchange, it's setting a new high for that particular exchange. So it's possible that, like, say something was just listed on Coinbase, but it's existed on Binance for a while, and it may be on a new exchange high on Coinbase, but it does have a prior high that's higher than that on Binance. Like that asset will show up in the new exchange high, where it's like specifically only on Coinbase that it's on a new high. The new yearly high is what it says. Like within the past 52 weeks, it is set in a high. Like today's high would be the highest high in the last 52 weeks. That's basically what that one is. Under notable highs is typically the list that I refer to out of this category, because oftentimes if it's in the under notable high watch list, it's also going to be on the new exchange high, and it's also going to be on the new yearly high. So this one's kind of the one that I go to first. I will import these just for fun, but this one's really, the under notable high is the one that I pay attention to. Under notable high is anything that is within 10% of its high, like within 10% of the exchange high, or 10% of the yearly high. So under notable high will most likely be, if it's on the under notable high list, it'll probably be on one of the other two lists. So this one's one I kind of watch the most. This one is, I just clicked on a random one. I have no idea what it is, but we'll measure real quick where it's at right now. In there, it's like the current price is only 1.7% below its all-time high. So this would show up on a new exchange high, a new yearly high, and under notable high. So like that's why I would kind of pay attention to this watch list more than the other two in the under notable high, or in the notable high category. This list is really just to familiarize myself with things that have gone into price discovery or are near price discovery. Buying assets off of these lists are both very high risk, because when you approach, notable highs, like oftentimes there will be selling at that level. But they also have the asymmetric reward of potentially running beyond anything that they've ever been before. So like you are on the ground floor of this running up into, the stratosphere. So what I will typically do on this list is I will monitor where it is. 'Cause like right now I can't do anything with this. I don't want to just buy it outright, but I'll pay attention to it in the future. Like I'll put it on I'll flag it so I can pay attention to it later and come back to see where it can create an ideal risk to reward scenario. So I'll put it on a separate watch list not a separate watch list, but I'll put it on a flag so I can refer to it later on and come back when it's actually in a point where I can buy it without risking it just going down to crap. A good example of when this would have been the time to look at it, this day right here, these 3 days right there, I'll make it a candle chart so it's a little bit easier. These 3 days right here, it would have also been on this same watch list. So if we looked back in the past, let me do the replay function. So as of this day, it crossed above its listing high, which is also another watch list to pay attention to. We'll get into it in a minute. But on this day, it would have turned into the new exchange high and the new yearly high. But there's no real good risk reward that you can set up here, because your closest pivot point, which we'll also get into, is like way down there. So like you're kind of buying on a whim and you don't really want to do that. So if we fast forward just a little bit, the next day it gets you set up right here, and you can see a resistance is sort of forming right up there. Like there's a level that people are selling from. So then the next day we see more resistance at this level. So like potentially this is something that we want to wait just a minute to show it can actually make it past this level. Then you see your first down day. So this still, like on this day here, it still would have shown up in this same watch list because it's within 10% of its yearly high. So it still would be on this watch list, even if I didn't, save it to a flag and deleted this watch list, it would still show up the next day. So after we have this red die right there, then this is when I would take advantage of this asset class on the watch list. I'd set like a line up at that top there, and then I would make an alert based off of that line. So when it's crossing above, then I'd want to buy in on this. And that's how I kind of utilize the under notable high list. I wait until it establishes some some clear resistance that I can work with. And when it does create that clear resistance, oftentimes it will move down and then go back up, so I can figure out a place to like assess my risk. So in this particular instance, like at the close of this day today, it would still be on this watch list. I would have this prior resistance that I can now work with. And there's a tool. Where's the tool? Yeah. So on this projection drawing tool right there, I would use the long position. I would set my entry, like I just click where I want my entry to be, and it would be at the high. And then I can drag my stop to where the low of this red candle would be. And this is my risk. Like I'm essentially estimating from this entry, I don't want to be in this position if it closes below that low, because that would probably mean that the market's about to die. And then my target, which we'll also get into in a little bit later, is a 2-to-1 risk to reward ratio. So I'm looking to risk $1 down there to loss to $2 up here, and that's where I'm taking my initial profits. So we'll see what happens. I mean, we already know, but like it got close. It got really close to stopping out, but it didn't close below the stop. And then the next day it hit the target. And if you would have taken out partial profits, you'd have been great, and you would have made plenty on that, and it's just running right now. So that's how I kind of pay attention to the under notable high watch list. And I did not cherry pick this example. I just picked one at random that was on the watch list today, and it would have worked out perfectly. Anyways, so that is the under notable high watch list. We are moving real slow for 40 minutes in already. Okay, now we'll go into the new listings category. This one is really simple. Let's import that list. Recent listings. And this is anything that has been added to an exchange within the last 30 days. And based off of this, these are symbols that have been added to the exchange, but they haven't been added to TradingView yet, or they were removed from TradingView. So like maybe it's something that showed up like 20 days ago, and then they're like, oh yeah, no, this is garbage, and then they delisted it. So that's what these red symbols on the side mean. It either TradingView hasn't loaded its data yet, or it's been removed. So you need to be like, there's nothing you can do if it's red. Just like, you can click the X mark on there and it'll delete it. But anyways, the recent listing, I'll flip through these every day, but it's usually just a quick look. The only thing I'm concerned with on the recent listings is something that has been listed and has gone down and is going back up to the listing high. That's something that I want to be paying attention to. A lot of times there will be overlap between this and the under notable highs, but sometimes there isn't. Either way, like I like watching the recent listings just to click through and see, what's been sort of added, because sometimes there's some really interesting stuff that you can take a risk on for a little bit of money, like not a lot, but a little bit. But you can get something that's breaking by its listing high, and you're basically in it from the beginning of wherever it turns into the future. So there's nothing wrong with throwing like, a little bit of money at something that could potentially be the beginning of its forever move. So let me look at chat real quick. At the end, can I talk about what exchanges wallets you use to trade? Yeah, sure. I can do that. Okay, next watch list is the increasing volume. These are sort of tricky. There are three lists. There's short term, medium term, long term. Basically, I didn't want to get too heavy into volume until later on. But basically it's looking at assets that have increasing volume over the last 30 days. So like today's volume is greater, like the average of volume is greater in the last 30 days it's greater in the last 30 and 60 days, and it's greater in the last 30, 60, and 90 days. So there's like a consistently increasing average of volume across those 3 time frames. I don't typically buy assets just because they're increasing in volume. Usually, I'll have my assets that I'm looking at on different watch lists, and I'll flag them. And once they're flagged, like let's put on the long-term increasing watch list. Once they're flagged, if I like this is something that I'm looking at on another watch list, if there's an asset that shows up as a flag on the medium term, long term, or short term watch list, then I'm going to pay attention to this even more than another symbol that I have a flag for that isn't on the increasing watch list or increasing volume watch list. So that's really the importance of creating these flags. Number one, it can separate it off of like an individual watch list, and you can kind of track it across multiple watch lists. So like this is an asset. I don't know what it is. We'll look at it real quick. Yeah, so this is an old flag that I would probably delete now because it's most likely not on any of the watch lists anymore. So like every once, like at the end of the month or something, I'll click through the watch lists that I have or the saved assets that I have, and I'll kind of cull the ones that aren't looking good anymore. But yeah, like back when I created this watch list, if this level here would have continued up and broken over that level, then that would have been like an entry for me on this one, but it did not do that and it died. It is on a long-term increasing volume, which I think is kind of weird because there's not enough price history for that. So, oh no, there is. Okay, never mind. I just can't tell. So there's enough price history. In this time frame, it is increasing in volume. So I imagine whenever it crosses above like whatever level this is right here, it will show up back again in Watchlist D, and that might be something that is interesting if it can rotate its way into Watchlist C. So that's kind of how. Let's look at a different one in case there's something on the short term or the medium term list that I already have a flag on. Nothing. This is going to be sad if there's not. Okay, well, Bitcoin. Yeah, okay. I mean, of course that one's interesting. It's Bitcoin, and it has been increasing in volume. This is one that Alan, I think. Nope, not that one. It was a different one, different gene. But anyways, if it's on a watch list that if I have a flag on it from a different watch list and it shows up in one of the increasing volume watch lists with a flag, because I've been looking at it as something else, and this is something that I'll pay attention to a little bit more than other things I might be interested in, because the more volume, then the more likely that it will be moving in your favor because other people are also interested in it. So that's how I kind of refer to the increasing watch list. I don't really look for an asset on that list. I look for things on other watch lists that are also in this list. And finally, we have the valid watch list, and this is not something I refer to really much at all. It's just kind of like a metric of how frothy the market is. See, I can't add this watch list because it's got over 1,000 symbols in it. So that means that over half of the market, or almost half of the market, is in a bullish price structure. So I need to be cautious in entering new positions because the market's getting really bullish and top heavy. So I don't often look at the valid list. It's just kind of there in case, you want to see how big or frothy the market is. So that is all the watch lists, kind of what they look like and how they're constructed. Does anybody have any, we're at 50 minutes right now. Does anybody have any questions on that before we move into implementation? Oh, yeah, I can't believe I didn't mention that. The question was, is there any particular time frame I like to use when viewing these? This is all relative to the daily time frame. I don't use them on any other time frame. That's how they're constructed, all off of the daily time frame. So yeah, this whole process is really sort of designed to be a set it and forget it sort of trade where you're looking for stuff that will move in your favor and be either a really quick win or a quick profit taking turning into a long runner. So yeah, that. What will be the longest time I hold a position? So when I tested this, when I forward tested it in December and January and February, I want to say the stats came out to being the average hold time was like 12 to 18 days or something like that. And the average win was 2 to 5 days or something like that. I can't remember right off the top of my head, but I can refer back to the post where I did the post test wrap up. But yeah, so like they'll either hit their target immediately, or they'll kind of languish and not do anything and kind of mess around. Either way, there are ways you can evaluate getting in and out, and we'll talk about that in a little bit later when I go into the implementation. Because there's an underlying theory that we're trying to take advantage of in the market that I'll get into specifically, like when I start talking about the breakout strategy. But yeah, on average, wins were like in 2 to 5 days, and the runners were around like 15 days, something like that. So a couple weeks, 2 weeks. Yep. I mean, the longest runner that I had during that time frame was like 2.5 months. So it can be longer, but that is when I say longer, it's also like long in the context of like positions that I'm looking to swing trade where they're like probably not lasting more than like three months or something like that. But yeah. All right. Don't see anyone else typing, so we can kind of move on from here. We'll get into implementation. Let me go to my drawing. Well, no, I don't have to do that. Let's go to Watchlist A's real quick so we can have a little bit more price history. All right. Let me see if I can find a good example. Well, we can go back to Vi, because this was the one way back when. So you can see on my chart, like each of these boxes in trade. Let's do the replay function real quick. This was one that I traded a heck of a lot back at the turn of the year, and had a lot of success with. Back here was when it transitioned from what it was in Watchlist D, or what is now Watchlist D, all during this time frame. From here, it transitioned into Watchlist C, and this breakout and subsequent follow-on price was moving it into Watchlist A. But anyways, what we're sort of looking for, if we're just basing things on support and resistance. Let me see if I can hide some of this stuff. Like the simplest way to use... Wow. Okay. All right. So the simplest way to use these things is with support and resistance, like without getting too crazy into technical analysis. Like that's really what we're kind of looking for. When it is on VAIOT, or well, it's by USDT on KuCoin. Since you can't see, I am turning the bar replay on, and I'm looking at price action prior to 2023, essentially. So it was before it had gone on its big run. In the middle of December, it had a spike up to like 20 or 0.027, and it retraced from that level. And in that spike over was when it moved from Watchlist D to Watchlist C. And as I was talking about earlier, like in this move here, I can't really do anything with that because there's not a good place to evaluate what my risk is. So I'm waiting for it to define some resistance. And that would have come in at this level right there. I don't want that tool. It would have come in at this level right here. Like I would establish this as my resistance level as price fell down multiple days after that. And I'm looking for price to break back above that resistance level, because this breaking above this level will essentially move it from Watchlist C into Watchlist D, because it's confirming your uptrend. You have like a low, a high, a higher low, and a higher high after that point in time. And when I'm looking at this, like I can evaluate my risk in multiple ways. So clicking on the long position tool again, like this is the level that I'm evaluating my entry on. Now I can define my risk. If I'm feeling very, very like risky, I can put my stop loss, or if I'm looking for a very conservative stop loss, sorry, I'm backwards here. If I'm looking for a very conservative stop loss, I'll look at what my pivot was. So like we have our high, our low, our higher low, and the higher high eventually in the future. So I'll have this low be my stop loss, because I know that if price closes, oh man, I missed. There we go. Sorry. If price closes below this level, then the structure, like the market structure that it created there, has now been lost, and it's essentially in a, like it's no longer in bullish price structure. So I don't want to be holding this asset. So this would be a conservative stop loss, because I have like this really long gap between, like, to let price fluctuate around to tell me that it's bearish. And this is not an ideal stop loss, because as you can see right here, it's 54% below my entry. Like that's a huge loss to absorb. So adjusting your risk, like I can move my stop loss maybe up to the bottom of this red candle where it went lower and then moved up higher from there. Or if I want an even riskier like entry, it could be like this consolidation candle, which also sort of associates with like the highest high close, like right over there. But like this would be sort of a risky stop loss, because there's no confidence that like this is an actual like piece of structure in the market. But that's one way you can kind of evaluate, because like it still is somewhat valid, because like you have your high close right there, which also aligns with like these levels right there. If I put like on the horizontal tool, like on the highest close, it consolidated right there again, associated with that high, which also matches like these past highs. And like scrolling back, it's like also still sort of relevant to these highs back here, and also still relevant to that low right there, that high right there. So it's like not, this is where like you can bring discretion in and like sort of make anything fit with your trade idea. But if you wanted to be risky, like that's some way you can sort of evaluate the validity of a potential stop when you're not basing it on structure. But anyways, if I had a more risky threshold, which I did at the time, like I can establish my stop loss right there. And like we were talking about earlier, I'm looking for a 2-to-1 risk to reward ratio. So I drag the top down until it's at 2 or roundabout. And like this is the target that I'm looking for my initial profit taking. And if I had the conservative stop down here, then I'm looking for 2-to-1 out of this huge thing, which would put the target right up there. Either one would have hit their target. So I either would have been out on a riskier position like around here, or I'd have been out on my conservative position up there. And ideally, I'm not taking the full thing out because I want to see this with my, leftover profits. And this is also where like you can create bigger and bigger positions, creating better and better profit. Because like, say I missed this particular entry right here, now I'm seeing it run up and it's in this A watch list. Like, what do I do to like get back into it? After this high right there, then you have price getting rejected, red day, closing. Like you're getting this whole level right here that's showing to be some resistance. So I can use this level as a new possible entry because like it's red, 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 and it's all sort of like stopping around this focal point. So this level now, we're in Watchlist A. I can look for a new resistance. This is a resistance that is showing either here, or if I want to be more cautious, I can wait for the high up there, even when it doesn't really matter. Using the long position tool, let's just take this just so we can be super duper safe. We want it to be close. We want it to be, trading above the highest high during this move. And how do I define my risk in this moment? It's looking for ideally structure. So like the market has come up, it's gone down, it's gone up, created a higher low, and I want to see that higher high. So I'm looking for structure to define where my risk is at. So I put my stop loss at. So this is my potential entry point. I can have a really conservative stop where I'm looking for the full structure to be broken. I can have a sort of mid-range risk associated with like this structure right there, where it's not like confirmed to be breaking down, but it's like still losing bullish structure. Or I can have the riskiest entry where I'm like right there just above, like my stop is just below these levels that were the proven resistance. So this could be another potential entry. And this would be kind of nice for me because this is like 17% for the loss, where this one would be like 36, 40% for a full loss. And like, I don't want to take that. So me personally, I'm cool with this, 17% full loss. And I'm looking for, again, that 2-to-1 risk reward ratio. So I drop that down. That gets me a target right there, which was hit in like the second day of being over the resistance level. If I was going on the more conservative stop loss, like right there, same entry still, looking for 2-to-1, that would put the target right up there. Still hit just a couple days later for a conservative, like a pretty good profit for a conservative entry. And after this point, let's say this is where it's in like full on stage 2 and you've had like multiple like structure, like bullish, higher high, higher lows, like forming. So this is again something that has moved up, and like if I missed it on these particular entries, now where price is way up here and like what do? I want to get in. You can either like set your new level right there because like it's showing that price is being rejected, or you can take a riskier approach and set your level right there, and let's see what happens. Like broke above that level. If it did break above this level here the next day, the same approach, like I'm setting my entry as the level that I'm looking to break, and I have a stop that is a conservative stop, either the lowest low of this red candle or a riskier stop right there at the close of that candle. Still looking for 2-to-1. This is really hard to do on this tiny of a chart. But like that would be my initial target, breaking above, it hit that. Or if I had my conservative, entry or my conservative stop down there, still looking for 2-to-1, that would put my target right there. We wouldn't have hit it yet. Playing out, we go below the entry, boom, closed out at a loss. That happens. So either way, you have a clear defined risk, and you have your targets and your stops. So the conservative entry on this one would not have hit its target. The riskier one, since it had a smaller stop, would have hit its target. That doesn't, mean you should take any risky entry over a conservative entry. It just means that like some win, some lose. Another thing is the more you get entries on the way up, the less likely they're going to be hitting their targets, just because the market is like run a lot, and consecutive entries, like the testing showed that like the first entries and the second entries were above 50% in hitting, and the thirds, I don't believe they made it to 50% on average of hitting their target. So it's why it's important to pay attention to Watchlist D and Watchlist C, because the further you get down the line, the harder it is to hit those targets, because everyone at this point in time is hip to the move. Like you're retail when you're getting in at the end, where earlier, like you're the smart money, and no one else really knows about it yet because they're not paying attention. That's why the watch lists are like super important, because you get to identify the stuff before everyone else really gets to. Let's play this out just to see what goes on. And this, again, if we think about, let me hide some of these, hide some of the things. If we go back and think about what I was talking, like everything really ties together. If we go back and talk to the stages, we have the stage 1, which was the accumulation. We have stage 2, the confirmation of a bullish trend. Then we have stage 3, where the market is distributing all like accumulation, bull run or markup phase, distribution, where there's a lot of volatility and not really moving anywhere. This is a distribution of profits. And then stage 4 follows that. Oh, well, never mind. This is what can happen. You have distribution, which leads into another stage 2. So at this point in time, the first trade would have been stopped out with that conservative entry, but it also gave you in this time, it's given you a lot of consolidation to like maybe make another trade. So what I would be doing at this point is I would be looking at, like personally, I'd be looking at, I forget what I did on this trade, but anyways, it was stopped out. I think the third one was stopped out, but I still had running profits from the first 2 trades that hadn't trailed out yet. So at this point in time, you have all this consolidation. Let me delete this level right there, just because. You have all this volatility and consolidation in this range. Let me draw out the range just for fun. Like this is our, wow, I did not want that highlighted all the way out there. Okay, so you have this price volatility in this range right here. When price broke above this level before, like that could be a potential entry, but at the same time, like you have this really, really large stop that you're like dealing with in structure, because you have your price going up, down, up, but like this is the closest place that you can really associate your stop loss with. So like that's way too big of a stop loss for me to like entertain. So I'd be waiting for price to like create a higher level for me to figure out what my risk is. So this would have prevented me from entering, just because there's no reliable stop loss. So price continued doing its little fluctuation thing, so I can move my level up a little bit higher and just wait, because there's no sign for me to say that this is going to be the level that I want to be in on. Consolidates more and more and more and more, and eventually on this candle it breaks above that level. So I'm kind of evaluating what my risk is based off the highest pivot right there, 21%. Not really great. Would I take the trade? Personally, yeah, but that's a really high stop. The reason I'd be interested in this more than anything based off of the stop loss is because I already had two positions that are in profit, and it's showing that it's breaking out from this new consolidation instead of breaking down. So like I'd be more interested in this trade than anything else, just because it's been a market leader, it's strong, and it's breaking out again. But this would have been a very risky position because the stop loss is like so huge. Either way, target would have been 2-1. Would have hit its target on that second day. Then it established a new level after it retraced. So I can choose to watch for a breakout above this level or watch for a breakout above this level. Let's see what happens over the next couple days. Jesus. Immediately broke out again the next day. So you'd be evaluating, like, let's take the conservative entry and the conservative stop. So like you'd be looking for the low of that to be like you're breaking above this high level, looking for a 2-to-1 risk to reward ratio. This is still a pretty high stop, 17% on that stop loss. It's pretty risky. We're looking for 2-to-1. So it did not hit the target. Let's keep going, see what happens. Boom, stopped out. So that is kind of the process of how this wins. So you had what, 5 trading opportunities. 3 of them worked out, 2 of them didn't, based off of taking a conservative or a risky entry. You would have gotten more or less profit, but either way, 100% on that one. This one, 75% on that one. This one, 17%. This one, 40%. So you would have had over 300, 400% in gains and then about 40% in losses. Like that's a pretty good setup. And this is just using support and resistance. It's not really using any volume. It's not using momentum. It's not using anything else. Like it's just using support and resistance to define your risk based off of an entry on Watchlist D or Watchlist C from right here. So that's essentially the whole process, going from one watch list and doing the trades based off of breaking over resistance. Any questions on the support and resistance implementation and trade execution? Okay, doesn't look like anyone's talking. So next we'll go into utilizing this with volume, which was really where you get into the specifics of the market theory. What do you mean yes and no? Shoot it off real quick. You can request to speak if you want to not type it out. I'll make the floor open right now. Yeah, that's okay. If I'm being very candid, this is not necessarily my analysis. This is based on a combination of 3 different professional traders. Like I was saying before, Stan Weinstein with his stage analysis, and then Mark Minervini. He has a couple books out if you want to read them. And he talks about super performers and combining these sort of, well, I haven't gotten into the volume or into some of the other metrics that are associated with this, but it's really sort of identifying the things that can do this sort of price structure or this sort of like performance. But yeah. Yeah, it really is. Using support and resistance with the long position tool is very valuable, and we can talk about that later if need be, in like another session or something like that. Anyways, let's go on to the last little bit here. Probably take the next 10, 15 minutes or so, and then we'll set up for asking questions. So the next thing we want to add in is volume. This is using the better relative volume indicator, which if you are an indicator user of mine, you should have access to. The indicator is set up to show a couple different colors, and those colors are associated with a different market participant activity. The theory that we're trying to play on when we are picking these, let me change this to a log scale real quick on the price chart so it looks a little bit better. The theory we're trying to play into in the market is what's referred to sometimes as a supply shock. When we're looking for breakouts in this particular context, we're trying to identify, like when you include volume in this analysis, we're trying to find stuff that no one is selling, or we're trying to find stuff that people are overwhelmingly buying. And when that happens, like when you have a combination of overwhelming buy activity and limited sell activity, you have these explosive movements because there's just no sell volume in the order books. And that's what we're really trying to identify. We're trying to find stuff that has the potential to be explosive. And that's where the volume analysis really can supercharge your ability to identify the right assets. The different color, the colors that we're looking for, like the colors we're looking for in particular on a move is the orange volume bars. These are showing high buy volume, or climax buy volume is what it's referred to. This is a combination of a couple different indicators and different people's types of analysis. So we're looking at relative volume, and we're looking at volume over like a particular look back. Relative volume just means that you can compare this volume from, like, you can compare current volume to past volume, and it will mean sort of the same thing. Where if we're looking at non-relative volume, or we're just looking at volume, there will be small, like if you just looked at numbers specifically, like when an asset first, like even just looking at Bitcoin, like there just wasn't a lot of traded volume, where like now there's like hundreds of millions of traded volume a day. And like if you're comparing whether this is a big day relative to like a big day back then, like if you're just looking at standard volume, like more recent price history will look way, way, way bigger than back in the past, but like it could still be a really slow moving day, even though it looks like it's way more volume. I'm sorry if that's confusing, but relative volume essentially equalizes volume across history. So you can tell that even though today is like this, or even though like this actual volume bar on this current day may actually be like the same amount of volume that as this day, but relative to this, like on the scale relatively, this is like 3 times, the traded volume of what this was, back then. It just kind of equalizes and normalizes volume. So we can compare from the past better. Anyway, so sorry, that was a tangent. We're looking for the orange volume bars on our breakouts, because this is showing that there's overwhelming buy side volume, not overwhelming sell side volume. What we want to be paying attention to leading up to the breakout is more orange volume bars than white volume bars. White volume bars are sell. They're overwhelming sell side liquidity. We don't want to see sell side liquidity leading up to our breakout. We want to see buying volume. So this is showing that like even if there are red days, that there's still that people like there's the sellers aren't overwhelming the buyers on those red days. So we want to be paying attention and we want to see more orange bars in the history leading up to our breakout. Also, there's a particular pattern that we're looking for, and that's this one right here, the green arrows that I have. Like this consolidation pattern is ideally the one that we want. And it's showing like where this is just like a V shape. This one is showing this like W with the higher low associated. This in Mark Vinervini's book is described as the volatility contraction pattern. And what is good to see here is you have this contraction pattern, and you have like it gets kind of challenging because there's when you add in volume, there becomes a lot more like complexity. But leading up to like in this bull move up here, we had like leading up to like this breakout, we have more orange bars than we have white bars, and we have volume decreasing as price is consolidating. The yellow candles mean that it's like abnormally low volume. So what's happening is as price is declining, you have the selling fall off. Like you do have selling, like people taking, like the sellers are overwhelming the buyers at this point in time. And then you have abnormally low volume. So on these last few candles, like you have this like downwards like there, but like no one is participating. Like the order books are like starting to get very, very, very thin. And that's kind of what you want to see as you get closer and closer and closer to your breakout. Because the order books are very thin. There's not a lot of traded activity, and it won't take very much to like rocket up the price. So seeing this W with the higher leg up here, declining volume with the yellow candles, like this is prime for your entry. And then on the second day after your entry, let me turn back off the logarithmic chart. On the second day after your breakout, you have these two strong orange candles, and that's just overwhelming buying, just tons and tons and tons of buying that rocketed up to get your profit target hit. So this is kind of like a picture perfect scenario where you have your W shape leading up to your resistance with volume just like dying off in the order books. So overall, orange volume leading up to your breakout, yellow volume or just low volume as you're consolidating into the breakout, and on the breakout you want to see orange. And that's kind of how you're just looking at colors to use your volume in identifying different setups. Let's go to just a chart that is not already drawn up just for fun. I don't know. We'll click on Maker for shits and giggles. Let me turn off replay. Oh, it is off. All right. So this is one that I was looking at a potential entry right around this level. The things that I was watching in volume was we had the down move right here with like strong selling. Then once price started like consolidating and not selling anymore, you had volume drop off. So like I'm really kind of interested in how this plays out moving in to the resistance level. And you can see like here we have like this kind of same sort of pattern. We have this little same W shape going into the resistance level, and it's not going to let me place it there. But you have this W shape going into the resistance level, and as price is trading around these levels, you do get some selling, right? Like, well, you have the volume dropping off, and you do have some selling bars, but like after you have the selling bars, you have a stronger orange bar followed by another orange bar followed by another orange bar on the breakout. If you can have an orange bar on the breakout, that's ideal. But yeah, you have this W pattern. You have more orange bars than you do white bars, and you have volume sort of decreasing into your breakout. Let me click on another random one. This is one I have not looked at. But we'll say, like, if we were looking back at the past, this would be your resistance level, or this would be your resistance level. You can kind of be picky and choosy. Like, we'll just say this one just for shits and giggles. But actually, we're not going to say that. We're going to say this one because, like, we're looking for that particular pattern, and that would be playing out in the charts like this, where you have your low, low, bam. So like once, like if I was not paying attention to this chart, like we'll just say, where's my replay button? This would have been on watch list probably C. I mean, it depends. Like it's really about the level that, like, it's about this pattern, is whether I'm picking closes, or I don't look at opens, but if I'm using closes or the wick highs, it's really dependent on the pattern. Like that's really what I'm looking for. Like it's all about this pattern right here. So once it's on a watch list and like I see this pattern starting to form, there are multiple places that this could have formed here. So I have multiple options. Like at this point in time, this was a higher low. Like if you have your high point, low, higher high, higher low, this is also creating that pattern. So I'd be paying attention to this as well, but it failed and broke down. So like this would be the level that I'm looking to break out from once the pattern starts forming. Like I'd be looking somewhere around there, or even, maybe that high right there, just something. Like the pattern started to form and I'm creating my resistance or level to break based on that pattern. So this pattern started to form. It didn't reach this level and failed and set like a lower low. Like it trailed under this and under that. So this pattern is now irrelevant. Then it started to set up another one right here. So I'm looking for this level, but I'm also considering that there's probably going to be resistance right there, which is not ideal. But anyways, so the pattern started to form. What I'm looking at in the past is like more orange bars than white bars. I don't really have that, so that's not super great. The thing that is interesting though is the magenta bars right here. Either magenta or blue is showing what's called churn. And it's the equalizing of buyers and sellers. So like this was a really, really heavy move down, but in this down move, the next two candles were showing that like that heavy sell liquidity was being met by like heavy buy side liquidity. So this is probably going to be a floor, because you have that like churn, like this equalizing of the sell pressure. So that's kind of nice to see, even though I don't have like a bunch of orange bars, like orange volume bars in this whole setup. So I'm kind of watching this pattern play out. I do have two white bars, but then I have like some bigger orange bars coming in. Let's see what happens. We have another strong orange bar leading into this breakout. This is problematic though, because if we set up my tool just like we did last time, this is where the conservative stop loss will be placed, like right there. Let's extend this out, sorry. This would be where my conservative stop loss is, and that's 25% to absorb a full loss. Gray doesn't mean anything. Gray is just a regular volume. There's nothing special about it. Sorry. So I have like this really long really long stop loss associated with this. So like this is not really a great setup for me to take. So I would ideally be waiting later for something getting up here, because I don't want to lose 25%, even though it is the right pattern. And look at that. Like you have the price hits this level and then like is retraced down, then it approaches that level again. So what I could do if I wanted to take a risky setup off of this level, boom, set that there. And then I'm looking at this candle that was like where it retraced down and like closed right at that level. Like this would be sort of a risky stop loss position. And then I'm looking for 2-to-1, just like before. There we go. So like that's a little high. 2-to-1 risk reward ratio. And then we'll let this go. Boom. Hit the target. Bob's your uncle. Whatever. But yeah, so that like your resistance is usually defined by the pattern. We're looking at volume to help give you some extra confidence in a trade. And you're also evaluating how far your risk is based off of structure, ideally. We can go to another one randomly and look at the volume there just so we can get like an idea. This one was, this was probably in stage 1 or on Watchlist D at this point in time down here. Then you have your boop, 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 boop. You have like your confirmation, your low, high, higher, low, higher, high. So this is where it transitions from Watchlist D to Watchlist C. And I'm looking for a moment to be able to get in on this from Watchlist C. So where my first retracement, if I was looking from the past, like this is probably the day it showed up on Watchlist C. So I'm waiting for a way to evaluate my risk. On this day right here, price went up and it went down for the first time. So this might be a potential resistance area that I'm looking for. So I'm waiting for price to get back to that level. And that happens just a couple days later where we have a high, a low, higher, higher low, and then like price starts to break above that level. So this, it's a really tiny consolidation pattern, but you still have that pattern showing up right in there. What's happening on the volume in that time? You have orange, 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 one white, a decreasing white. So like even though you do have a white bar, the sell volume is decreasing over this period of time. Then you have an orange bar on the breakout. That's really nice. So what am I doing? How do I get in on this? I've already figured out where my structure is at. So now I need to, where's my drawing tool? I don't remember where it's at. Okay, long position. So this level was the level that I was looking to get in on. Where's my structure? The highest low right there. Like if I want a conservative stop, I can go to the lowest low. If I want a risky stop, I can go to the close, like the highest close. Then I'm looking for 2-to-1, drag it down. And like that would be my trade on the breakout. I'm looking for that target hitting 2 days later. And that's really kind of all it is. Looking for this pattern on some watch list, ideally C or A or B, and look for volume to confirm that and trade the break resistance. And that's kind of all there is to it. Any other questions? I've just like flipped through tons of random charts. I can continue flipping through charts if people want more examples, but that's really kind of it.